Okay, let's talk Applied Digital, ticker APLD. Is it a data center or is it basically a gold mine right now? I mean, the stock just soared over 19% in one day. We really need to dig into what's going on here. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, it's all about APLD.
And just setting the scene a bit, APLD is making this climb against, well, a pretty cautious market backdrop. Our research shows pre-market futures are basically flat. Wall Street seems, a bit nervous about forecasts for slowing U.S. GDP growth next year, 2025. Plus, you've got Fed Chair Powell speaking. So the market's kind of waiting, holding its breath.
Right. Okay. So headwinds there, but let's focus on APLD itself. What caused that massive 19+% jump?
Well, the big catalyst seems to be this huge strategic pivot. There was a CEO letter laying it all out there, shifting away from their old crypto stuff and turning those operations into AI factories, high-performance computing. And it's not just talk, right? They've locked in 3 really big 15-year leases with CoreWeave.
CoreWeave, yeah. Specialized AI cloud provider, growing fast. Exactly. And those leases alone are expected to bring in something like $11 billion in revenue, confirmed. That's just, wow.
A game changer, potentially.
Totally. And they've already broken ground on a new facility, too, like a $3 billion project. No surprise, Wall Street analysts are pretty much all saying buy or strong buy.
Yeah.
Unanimous.
Okay, but here's where it gets, well, complicated. That future sounds incredibly bright. $11 billion, AI factories. But the present, or maybe the recent past, tells a different story if you just run the numbers. Based purely on its historical earnings, which, remember, include all those heavy crypto-era costs and capital expenditures, the standard valuation models we looked at, they spit out a fair value of negative $4.41.
Wait, hang on. Negative $4? How is that even possible when they have an $11 billion commitment sitting right there?
Exactly. It really highlights the conflict, doesn't it? The traditional models, looking backward, they just can't seem to process this massive, locked-in future revenue stream properly. They're sort of broken by the pivot.
Okay, so the valuation is basically playing catch-up. Or maybe it's just irrelevant given the news.
Well, the market seems to think the future matters more right now. But it creates this really interesting tension. You see that reflected in the sentiment data, too. It's like a tale of two extremes.
Right. So on one hand, you look at the options market. It's incredibly bullish. The put-to-call ratio is way down at 0.37.
Very low, meaning lots more bets on the price going up than down.
For sure. Nearly 3 call options for every put. And the most popular bet, it's right there at the $25 strike price. That's a key psychological level.
But, and this is the big but, you have this huge institutional bet going the other way.
Yeah.
A massive 26% of the company's float, the available shares, are sold short.
26%, wow.
Yeah, that is a huge number. It sets up this classic battleground scenario. Any more good news or even just sustained buying pressure could potentially trigger a massive short squeeze.
Okay, so sentiment is split. What about the charts? What are the technicals telling us?
Well, looking at the chart, the trend is just undeniably strong. Bullish. It looks like a full-blown breakout, honestly. And it's confirmed by a really big spike in volume recently.
That volume surge shows conviction. People are putting money behind the move.
Definitely strong conviction there.
But we do need to wave a bit of a caution flag here. The momentum indicators, they are running really hot, way up in what we call overextended territory.
Meaning it's gone up too far too fast.
Sort of, yeah. It suggests the stock might need to take a breather, pause or pull back a bit to consolidate these gains before it can potentially move higher again. It's quite stretched in the short term. And volatility is also really high, and it's actually expanding. So expect big price swings, both up and down. It's not likely to be a smooth ride.
Okay, got it. So putting all these pieces together, the huge potential, the weird valuation, the split sentiment, the strong chart, but also the overextended signals.
Yeah.
What's the overall take?
Our analysis boils down to a cautiously bullish outlook for APLD.
Yeah, cautiously bullish. The main risks making us cautious are, number one, that huge 26% short interest. That's a lot of smart money betting against it. Number two, those overextended technical indicators screaming for a pause. And three, just that general nervousness in the broader market we mentioned earlier, the GDP worries.
But what keeps us leaning bullish despite those risks? It's that fundamental story. The AI pivot, that $11 billion CoreWeave contract, it feels like a genuine game changer. It's the kind of narrative that really can overpower traditional backward-looking valuations and potentially fuel this rally further, even squeeze those shorts.
Right. So for listeners watching this play out, there are some key price levels to keep an eye on. On the upside, $25 is the big one. Getting convincingly above that could really ignite things, possibly trigger that squeeze we talked about.
I mean, on the downside.
The key support area, your first line of defense, is probably back down around $20 to $21. That was the initial breakout zone. And if it closes below, say, $19.87, that would probably invalidate the immediate bullish case for now. That's the critical level.
So bottom line, Applied Digital is really this fascinating battleground. You've got this spectacular future narrative clashing directly with a difficult financial past and present reflected in some metrics. It's definitely a high energy, high stakes stock to watch right now. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.